Good morning. You're watching The Market right here on 18 with me, Aisha Faridi. I'm on the Bash, Nikunj, Dalmia in the studios. Yesterday, the markets, yes, we did, scale up higher along with the rest of the globe. But then we fell as well. Pretty much the pattern that we've had day before, wherein banks actually led the fall. Looking at the current macro environment, Brent is back at $78 to a barrel. So you've seen a bit of a perk up coming in there. The 10-year yield as well has inched higher all the way to that smidge above that 4% mark. And the dollar index currently at 102.5. So it's pretty much every day as it comes, but the bend of the market definitely is on the downside.
So Aisha, I think the best strategy for next couple of days is just lie low.
Yeah, do nothing.
Just lie low.
Yeah.
Rather than preempting what markets would do, I would say let the market prompt you which way it wants to go. And the market will prompt you. I see the following happening. I think in last 3-4 trading sessions, Nifty has been absolutely flat, both in terms of price action, in terms of the absolute change, and also what we've seen in terms of the open interest addition. There are a variety of factors why that is happening. But the bottom line is that the Nifty pretty much is jumping in the same place. So the fact that the Santa rally would have spilled itself from 2023 to 2024, that has not happened. And at least personally at 18, we were not expecting that to happen. Second, what do you do? I think for anybody to make a case that markets have topped out and we are not going to be for some lot of volatility and lot of downside, I think that also is not applicable. I see the following happening, which is that lie low, let the market prompt you what it wants to do. Market may prompt you this week, market may prompt you next week. But when there is a little bit of panic in the market, and you may want to define the word panic based on when a Nifty support is taken out, that's the time you want to really start buying. So if you want to participate, you definitely want to participate at lower level. Let the market prompt you with something. And I think that prompt will come when Nifty starts slipping below the key support level of 21,500, 21,400. That's the time you will actually see a little bit of panic. Everyone who's centered around that as like a line in the sand and it will be holding on. Our technical experts, they will start panicking. And that's the time you actually will start getting some mini bargains in the large cap, in the mid cap. So I'll say it again. Don't preempt, let the market prompt.
Yeah, but it is a heavyweight led sell-off regardless. Same pattern as we saw in the last 2 trading days. Yesterday also, HDFC Bank, Reliance, ICICI Bank, they were the ones on the back foot. And
they were supposed to be leading it from the front.
Yeah.
HDFC Bank
was the top call end of last year.
Yeah, I mean, this is the consensus stock, nothing wrong with the numbers, and yet a consensus, yet a big underperformer. So if you have HDFC Bank, Reliance, ICICI Bank and Infosys, if they are not moving in sync with what the market is doing, be rest assured Nifty is not going to do anything. FIs are back, but flows are actually moving differently. So for me, if you frankly ask me that what the realization has been for me, just about everyone is saying, okay, banks are cheap. FIs will come, they will buy banks and they will buy HDFC Bank. FIs are coming, but they are buying different stocks. They are buying an Indian hotel. They are buying autos. They are buying, consumer names. They are buying fintech. So it is not that FIs are not coming back. Block deals are happening. So the quantum will look very strong, but the allocation is not going to what could be called as the traditional names. FI will come, they will buy good old HDFC. If they are not buying HDFC, they'll buy Reliance. If they're not buying that, they'll buy ICICI Bank. There are some who will buy all three, but right now they are buying none. Yeah. So that I think for me is the big thing. And till the time these 4-5 sumo stocks, if I may use the word, between HDFC Bank, Reliance, ICICI Bank, Infosys, you got like what?
Solid weighted, yeah.
Yeah, HDFC Bank itself is 14, Reliance is 10, that's 25, add back the other two, it's actually 35 to 40% weightage. 40% weightage is just there.
And they're skipping all of it.
Yeah, I mean, that's what data is indicating, Aisha. I mean, just think about it. Even in the October to December, let's actually look at the data. Let's look at the data from October. Let's say from 1st of October, Nifty, Bank Nifty, HDFC Bank, ICICI Bank and Reliance. We'll wait for it to come up. We are only looking at this year. Just a little bit of patience, folks. It'll come up. You'll understand the point I'm trying to make here. Now, that's HDFC Bank for you from, let's say, October. It's giving you 8% return. Reliance has given you 10% return. You've got a return of 2% in ICICI Bank. Thank you. And then let's look at Infosys, 6% return. Superimpose it with Nifty and the Bank Nifty. What do we have? This was like the most precious part of the market. And this was the time when you saw like a breathtaking rally, a rally to remember. Last 3 months, touch wood, 2023 is like a dream come true moment for just about every investor. And in that, what did we get on the Bank Nifty underperformance? Nothing from HDFC Bank, nothing from Reliance. That's the right or the wrong, I don't know, but that's the state of the market.
And to think in the month of December, people were making money on pretty much everything, especially when it came to stocks within the broader universe. Yep, but that is the stark reality when it comes to those heavyweights. Let's just quickly tell you about the global markets as well. You did have a pretty flat close coming in. Nasdaq was a bit of an outlier. That managed to echo out again. A lot of those big tech stocks like Nvidia, Amazon, Alphabet, they managed to pop up. But across Asia, it's a little bit mixed. You've got the Japanese stocks, though, that have extended gains. It's a 33-year high that they saw in the previous session. And that continues to remain in the spotlight when it comes to the overall Asian screen. But back home then, kickstarting the earnings season and just taking a look at the overall expectation, it seems like the revenue is expected to be higher overall. This is sector-wise 5% with a PAT growth of about 12%. And Nikunj, if we were to look at individual sectors, then where is it that we're expecting the maximum growth to come in?
See, let's look at whether expectations are the highest. And expectations are highest in consumer discretionary, which is autos largely, and anything which has got to do with consumer spend, because the inflation and the base effect is kicked in. So everyone in a sense is hoping that you'll actually see a 20% jump in NBFCs, a 10 to 15% jump in banks, and IT is the only sector where sequentially everybody is penciling in no uptick or no decline. Now, if one really looks at what the earnings trajectory has been, that in last 5-6 quarters, every quarter 50% to 60%, on an average 50% plus companies have managed to beat the estimates. So we've had a nice steady earning upgrade cycle for last couple of quarters. The market positioning is such that we need a strong quarter. Companies have to not only meet expectations but beat expectations, and the earnings cycle actually should continue in the right direction. That's where I guess the real strength of the market would be tested. So this time around, it will not be a sector, it will not be a theme. I think it will be individual companies where the earning expectations and the forward commentary really has to be mapped. I would look at this earnings season as a very stock-specific earnings season rather than calling out a sector, because there are so many variations within sectors which actually will be visible in this earnings season that you cannot put your finger and say, okay, IT is good and banks are bad. No, I don't think it is like this. You'll have to really look at individual companies. And in terms of the trajectory, the challenge I think for the market is that everybody is convinced numbers would be strong, earning upgrade cycle would happen. If that does not happen, then we could hit a air pocket.
Yeah. Okay, let's hear out what the global commentary is like, because globally as well, we are a bit on the sidetrack. Vinny's here with all the commentary overnight. Vinny?
So absolutely. Firstly, let's start the commentary coming in on Bitcoin. And this one we saw because coming in is why Bitcoin actually saw a lot of volatility overnight. And that was because when you see CSE governor's account on X was hacked, which indicated that Bitcoin ETF may be approved. But that has not yet come. They clarified that the account was compromised. And because of that volatility, after a sharp rise, we saw a sharp fall coming in. And Peter Schiff is highlighting that this volatility actually indicates that, there could be some more volatility. It's expected in terms of the Bitcoin ETF in terms of an approval or not an approval will be expected today. So that is post-market hours in Indian market, and it's better to sell today in terms of the Bitcoin as of now is what the highlight is coming in from Peter Schiff. Now we have David Rosenberg, who is highlighting in terms of overall the risk that is there in terms of the cyclical summary risk, which actually is talking about the risk appetite of the investors, the extended gains in 2024. We've seen a sharp rally, but he believes that, that is not something exciting that he believes that could last because the fundamentals are not supporting it. And that's the view that he's keeping. Little support that is coming from the fundamentals. So one should be quite cautious as of now is the view there. Lastly, we have a commentary that has come in from ECB's Willery, who's highlighting that, they're remaining vigilant in terms of the inflation data point. Furthermore, reiterating that 2024, they could see the first rate cut that will be coming from ECB. So yes, keeping an eye out on inflation closely. First rate cut is something that one could expect now.
Thanks very much for that, Vinny, highlighting all the global commentary. Let's find out what our chartists make of the market setup. Then Kunal as well as Nuresh joining in on the show as always, and taking a look at the texture of the market, the fact that we've remained absolutely flat. Kunal, what do you make of the markets at the level of 21,500, and when do you believe maybe we'll hit the panic button?
So good morning. May not be hitting the panic button, but then I would believe that we could probably be getting into a phase of a correction, or at least the demand should overpower the supply should overpower the demand for the markets over the very near term. So what we saw yesterday and day before. So day before we saw the indices going into a sharp selling pressure. Then yesterday we saw the first half the index going into a phase of a bounce, but we failed to surpass about the day before yesterday's high for both the indices Nifty and Bank Nifty. And in the second half, we saw the index coming back into making fresh swing lows for themselves. Bank Nifty closing at almost a fresh monthly low for itself. Also is an indication that there is weakness which is emerging into the bank index, and the Nifty is also now on the verge of breaking below the 21,500 mark. So this could be a double retest of the support as well as a possible break below the crucial support for the indices. So I think it's at these point of times it makes a lot of sense to try and be a bit more cautious than what we were maybe a few weeks back when the indices were going into a strong degree of momentum. So we are consolidating, but the drift on the consolidation should be on the downside.
Right. Nuresh, hi, morning. What do you make of the weakness that we've been seeing consistently in the likes of HDFC Bank and SBI? And I want to correlate that to where you're going to trade, the Nifty Bank this morning, and of course, coupled with ICICI Bank.
So the heavyweight banking space has not been able to see any follow-up as such. So if you look at it, 1,000 was the previous high for ICICI Bank, crossed above it, went to 1,040, came for a retest, and every attempt tries to make a pullback up towards 1,000, 1,020 levels. The stock again flops out. So we have seen that happen with ICICI. Then we go to HDFC Bank, the next heavyweight. 1,700, 1,750 has been a problem zone for the last 4 years. This might be the 6th or the 8th attempt on that area. Merger done, merger not done. All the periods over the last 4 years, every time it has come closer to 1,700, it's become a problem zone. Again, we've started correcting from the same levels. So going forward, once it can sustain about 1,700, 1,750, that is where the trend changes. Same thing happens with SBI. 630 was the previous high, went above 630, made a dash towards 650, and now we are back below 630 levels. Out here also 610, 630 remains the support zone. But most of these heavyweight names have not shown a downward momentum also in a strong way. So for now, it looks like a consolidation to be happening across all the indices. So Bank Nifty as well as Nifty could consolidate, have a slow drift rather than a sharp fall.
Drift is what's expected when it comes to the Nifty and the Nifty Bank. Let's find out individual stock strategies then. And Kunal, what's the view?
So I'll still go with a mixed play in terms of the recommendations, one buy and one sell. The first one is a Ban Poonawalla FinCorp. The stock yesterday made a fresh swing high, closing above 470 plus mark. Excellent momentum for the stock in the last 3 days, in the last 3 weeks, and over the last 2 to 3 quarters also. So expecting this sub move to continue for the stock over the near term. 500 as a target. Stop loss could be kept at 460. And second is a sell on ICICI Bank, a clear pattern of lower highs and lower lows. In fact, this is the third fresh swing low for ICICI Bank from the 15th of December high the stock had made around the 1,030-40 mark for itself. So would expect another round of follow through on the downside. Targets of 955, stop loss at 995.
Right. Okay. Naresh, what stocks would you recommend?
So looking at mid-cap names more on the low beta side, first is about Granules India, which has given a breakout above the 400, 410 mark, went up higher, doing a retest and showing relative strength yesterday also. Expecting this to make a fresh move towards a new all-time high. Stop loss at 400, target price of 450. Second is a buy on Bosch Limited, which has given a breakout above the 22,000 mark, sustaining well in this markets, as well as has been a relative underperformer previously in the whole auto pack, and now has started to show outperformance. Yesterday also hit a new 52-week high. So good momentum here, maintaining the hold on it. Target price of 24,000, stop loss at 21,800.
Okay, let's get a move on then away from technical analysis to stocks that are in the news. We've got Anisha right here to discuss that, and Polycab, the first one, that's been under pressure, Anisha.
Oh, well, yes, for the last couple of days, that stock is down almost 10%, has lost almost 8,000 crore in market capitalization. And of course, that is because there are reports going around that the company might be involved in some sort of tax evasion. And those were the reports that were doing rounds. But the company has come out with a clarification. They are denying all such rumors and saying that the company has been following the law and is cooperating with the government and the tax authorities in terms of their investigations as well. But of course, we have seen that the impact has come on the stock price. The stock is trading below its key moving averages as well. The RSI is at 28, which is the lowest level that we have seen since June of 2022, indicating that, of course, it's in the oversold territory. The stock is currently trading at around 38 times. The peak has been around 45 times. But Nikunj, this is one of those darlings that the stock market had, right? It had become one of those go-to stocks in the entire wires and durable space. How should one approach it right now? Because if you go by Bloomberg estimates, it's still recommending 62% brokerages still recommend a buy.
No, see, that buy is a function of also what's happened in terms of last 2-3 years and how they've just really managed to occupy the center stage, and they've been a pedestal strong in terms of the P multiple they're commanding. So one is the impact, and second, one is the assessment of the news, and second is the impact. Now, since a stock is priced to perfection, it really had become darling of the market. There were a lot of margin trades which were there. It is an FNO. So what happens is, typically when a stock which is priced to perfection and after a great return, when a news like this comes up, the first reaction is that you sell and then you react. And I think you sell and then you react kind of a factor really was at play. B, after great run up of about 100% in last 1 year, you got to really ask yourself is that what is the fair P multiple for this entire industry and per sector per se. I mean, these stocks cannot be commanding P multiples which are 50 times, 50 to 60 times plus, because they are not like fat margin business, and the growth rate is not going to be like, oh, you know, like fintech and consumer tech, that you can give this kind of an P multiple. So I think for the sector per se, P multiples are likely to contract because the growth base effect would kick in. In that, Polycab really occupied the center positioning. A lot of folks bought into Polycab because of price, not because of business. And when a news like this comes out, market will always see, you know, panic. I don't know comment on the income tax, query and what it will actually eventually mean for Polycab. We'll have to wait for the department to conduct their research and for Polycab to come up with a firm statement. But for me, I think this was an overowned stock, expensive, and typically when a news like this comes out, you actually will see a panic reaction like this, which I think is not surprising, at least in my book.
Okay, that's the take coming in on Polycab. But Anisha, what's the second stock on your radar?
Well, I'm watching for IT stocks, not only because tomorrow the earnings season will kickstart with TCS as well as Infosys coming out with earnings. But ahead of that, Nuvama has actually gone ahead and upgraded the sector in the sense that they've increased the target price for a lot of companies. And they are saying that 2024 start is going to be a mirror image of what happened in 2022 because that was the time when we had seen that the interest rate were at the so-called bottom. From there, we started inclining and the stock prices started declining. It's going to be an exact mirror image of that. That is to say that the interest rates are going to come down and the stock prices of the IT sector are expected to go up. What they're also talking about is the fundamentals of the sector, and they say that throughout the time period, the deal wins have been strong and the fundamentals haven't worsened or became very, very bad. So they're still supportive in the sense. Going forward, they're saying that the focus will now shift to FY26, not even FY25. They're talking about FY26, and that is what they believe is going to be supportive for the sector as a whole. But I'll be intrigued to actually hear out the commentary tomorrow, actually, Nikunj, from the managements as well. What are the things that you are watching out for, or you would want to hear from the managements tomorrow for the sector?
Sinisha, while the deal wins have been fat, but there also have been a big cancellations which have happened. Deal translation is not happening. And while I respect for Nuvama is coming out with, they are actually making a case that there is a macro change, and if interest rates they come down, a sector like IT will always do well because that is how historically things have moved. But guess what? I mean, 2023 was not a bad year for US macro. Things were actually pretty decent for them. IT stocks still did not do well. So I don't think you should buy IT just because of a macro trade and interest rate tailwind one. Second, I think for me, the number one indication, Anisha, really would be what happens to the employee addition. For me, that is like an indicator and more like a canary in a coal mine, and I think it is the biggest guidance. If you are confident, you will hire more. If you're getting order books, you need more manpower. But the fact that if you're growing and if you're not hiring, it clearly means that you think that AI in a sense has started impacting their business. And what really amazes me is that nobody's talking about it. Look at the global delivery centers which are opening in India. I mean, I spoke to Rommel of Deloitte. He said that, look, our business is going gangbusters. We spoke to PwC. They are pretty much had the same thing. None of the reports, Anisha, are talking about the fact that a lot of MNCs have started setting their own shop in India. They're bypassing the Indian IT sector, and they pretty much are running their own back-end system per se. So the sector may grow, AI is at play, but is that business really translating into something else? It's like saying that India is growing, but the unorganized market is not growing because organized guys are getting a lot of market share. In this sector, I think the GEC, you call them GEC, right? GCC.
So this is something we did bring up in our conversation last time as well, post-earnings with the TCS management and LTI Mindtree. And what they are saying, the kind of scale we have, they can't copy, and the kind of plethora of services that we offer, they can't replicate that. So obviously there will be competition, nobody is denying. But they're saying it's nothing that is going to compete with us in that sense.
I'm saying that if I look at the growth rate of GCCs of the top 4 companies in India, Deloitte or KPMG, they do high-end business. So obviously it's a differentiated product, but can they really scale up?
Yeah,
they can scale up. And if they scale up, will they come at the cost? Will they eat into the lunch of IT services? The answer to that is yes.
Yeah, and talking about the hiring, we did get that, Naukri's JobSpeak index. It was down 15% year on year in the month of December. So that is also not giving any indication in terms of hiring. So we'll have to wait by and see what happens. But for now,
the reality is different. Some of the guys, until they're smoking what I'm not, I don't understand the business. Seriously.
Okay. And that's the reality then, at least when it comes to IT, from what the analysts are saying. Anisha, thanks so much for joining in and giving us that heads up. Tell you what, it's time for a very quick break, but don't go anywhere. We've got lots lined up when we return. Staying on with us, this is The Market. We've got Sanjiv, Bhasin, as always, joining in on the show. Sanjiv, thank you so much for taking time out. Let's begin then by talking about the earnings season and in particular what the expectation is across the board. Are there any sectors that you're expecting hits and misses from?
Yeah, good morning, Avan. So I would expect banks to come out with strong numbers, even though NIMs could be slightly compressed, but volumes will be very, very strong, particularly some of the large cap, like the SBIs of the world. Given that fee income again for them will not start to play out. And I think Kotak could be a dark horse over there. Both sides of the coin, the private and the PSU. IT will be a little bit of a laggard and we would look out for further guidance. But the real best play will be arguably the capex stocks, the ABB, Siemens of the world, which have been on a very, very steady wicket. And Larsen will come out with, I think, arguably the best earnings ever. On the other hand, we think the mid caps, depending on change of scenario, will see a lot of traction. And, like I said, the real froth is on the mid cap earnings and guidance, because a lot of the stocks are now way ahead of their targets. And that is what the discount on the Nifty now to the mid caps is telling us, that if there is any earnings surprise, then, there could be some amount of selling in the mid cap stock. So we think banks, capex stocks will lead from the front. IT could be a, underperformer on the results side.
Sanjiv, hi, morning. But that enthusiasm doesn't seem to be playing out in the banking stocks, though, at least for the last 2 days. And so far this year, HDFC Bank has actually fallen by about 3.5%. And even the mighty ICICI Bank is down nearly 2%.
Correct, Aisha. And that is part and parcel of some ETF outflows. We know that the Bank Nifty had run almost 4,000 points in December. In December, and I think there has been a reasonable amount of profit booking there. But I think earnings will be the surprise packet there. Now markets can be, both greed and fear on a regular basis. But I think banks are the one where you should be. Actually, large cap private banks are looking extremely attractive. So the only problem there has been that they are over-owned, and hence any slight ETF selling or dollar strength will see them react to that. I think this reaction in the last 2 days is more with the yield in the US going up. But on the other hand, Indian yields have fallen because of this inclusion in the bond index, both by JP Morgan and now Bloomberg. All that means that yields are going to be softer, and I think NIMs will increase over time. Secondly, Aisha, look at the type of capex you're seeing across the board from large corporates to MSMEs. So private banks will be part of that. And on the government side, extra budget in defense railways will mean that State Bank will actually bear the maximum amount of lending over there. So I am relatively optimistic on the banks rather than the rest of the market.
Kunal, but are the charts reading that? Is you think there is enthusiasm and scope for an SBI, ICICI Bank, or even Axis IndusInd to actually scale up after their numbers?
There was a point mid-December or second half of December that these stocks were looking quite strong, where they would probably break past their resistances. But, they failed to try and encash on that opportunity for many of the private sector banking names. I think HDFC Bank was just about a 2%, 2.5% close towards breaking its lifetime high levels. ICICI Bank had already done it, but then the stock had lost its momentum around the 1030 mark. It topped out in mid of December, and so far in the last 3 or 4 weeks, the stock has already gone through a correction of more than 5-6% so far, making a pattern of lower highs and lower lows. What was also worrying for the markets yesterday was slight pressure which came back into the large cap PSU banking name like SBI, and even stocks like Axis Bank, they fell under some sort of selling pressure, even though there are no major short additions so far into these two stocks. But the fact that those large cap private sector banking names like ICICI Bank and HDFC Bank, they have seen an incremental amount of short built up, and even the weakness in the larger cap PSU banking names, etc., they are causing a bit of a wobble situation for the entire banking stocks as such. And I'm talking of the larger cap names specifically. So I would probably believe that till the time the outlook is not clear whether these stocks are going through any kind of a major long built up and whether these stocks make a new high for themselves, I think till that time it's going to be possible that we have to play a lot more stock specific. We have to look out for more downtrend to these stocks, and I would probably expect that many of the large cap private sector banking names could correct by a margin of at least 3 to 5% further from current levels.
Okay, fair enough. That's the view coming in. Chart check on some of the heavyweight banks. But let's focus in on cement, as the channel checks in the month of January have seen a moderation of 10 rupees per bag in the pan-India prices. Let's get in all the details. We've got Samit here to fill us in.
Well, cement companies would remain in focus because the pan-India channel checks are indicating that the prices have actually declined in the month of January by around 10 rupees per bag compared to last month. However, there has been some marginal improvement on the demand front. When it comes to the southern region, the prices have declined the most compared to other regions by around 19 rupees per bag, and dealers are saying that the reversal in the prices are largely attributable to lower demand coming in owing to the heavy rainfall in the Tamil Nadu region and because of slowdown in infrastructure spending by Kerala, Telangana and Karnataka state government. However, dealers also indicate that demand would continue to remain subdued in the month of January owing to the upcoming festival season and because of labor unavailability. Now, Ramco Cement is the volume leader in the southern region, so keep an eye out for that stock. When it comes to the eastern region, they are saying that the prices have continued to moderate after a record price hike that we had seen in the month of September. Now, dealers are expecting demand in the month of January to improve given that now prices have come down. Construction activity could pick up in the eastern region. Now, Nuvoco Vistas and Dalmia Bharat are the major players in the eastern region. When it comes to the northern region, prices have corrected by around 10 rupees because of colder winter, which led to lower demand, and also because of ban on construction activities. Now, dealers are expecting demand to improve only from the month of February when the temperatures would become a bit more warmer. Now, here Shree Cement and Ultratech are the volume leaders in this region. When it comes to the western region, the big price hike was taken in the month of October, which has now been largely reversed after the recent cut in prices that we have seen, and demand on the other hand has seen some marginal improvement as labor availability has improved in this region. Now, in this region, it's Ultratech and Ambuja who are the market leaders, and when it comes to the central region, prices have corrected by another 5 rupees per bag, and dealers are expecting housing activities and government spend to gain traction from here on, and Ultratech and ACC are the major cement players in this region. So keep an eye out for the cement companies in trade.
All right, thanks very much for that cement check. In fact, Sanjiv, wanted to get in your thoughts owing to what Samit just flagged off with respect to the channel checks, how you're reading into cement.
So, Aman, a couple of things. We know that the the weather and the pollution factor caused some construction activity to go on hold in late December, and you had extreme cold. It's again 8 degrees in Delhi and around, so that could be an effect. You are aware of the floods in Tamil Nadu and so on, which have played a little bit of a dampener there. But we continue to think volumes and look at the activity. Look at real estate stocks. If real estate stocks are getting re-rated on sales, the input conduit has to be steel and cement. So no two ways. Add Ultratech, add Ambuja, add Dalmia Bharat into your portfolio on this correction. Cement will be a no-brainer right up till the elections, and you will see more cause of price hike come as soon as the weather possibilities increase. See, cement is in a cartel place. There's a 58% of the market is owned by 5 big players. Ultratech has the market share of 138 million tons, and no question about it that volumes are the strongest they've seen. And I think volumes will make up for the slight bit of correction in prices. I think prices again will start to rise from February as input costs start to go up because coal prices have again started to rise. So we are overweight on this sector, and we think select stocks continue to be very, very attractive, particularly Ultratech, Ambuja, and Dalmia Bharat.
Right. Okay. All action today is in Gujarat, isn't it? Few hours before the vibrant Gujarat Global Summit kicks off, and there's much excitement around Prime Minister Modi's meet with global CEOs, which has already started to happen since yesterday. And a lot of global dignitaries as well will be, participating in Gandhinagar in Gujarat. In fact, we'll get our colleague Anurag Joshi as well to join in just a short while from now. But Sanjiv, I want to pick up on Polycab. I mean, this entire IT raid, while the management last evening clarified that they're fully cooperating with the authorities, but 8,000 crore rupees of market cap got wiped off owing to this tax evasion report, which was as minuscule as 300 crore rupee. We're talking about a sizable company. We've all seen since its IPO, this is one of the most preferred plays in the market. Are we looking at significant derating from these levels, even though the issue seems to be out of the way?
Well, Aisha, it only highlights that corporate governance has to be at the helm of any big, large corporate. The underlying business definitely is a very, very strong wicket. But these type of things put problems when the prices are at sky highs, and such events actually mitigate the performance of the underlying asset, which is extremely positive as far as the business goes. So I think we will have to wait for more clarity on that. It is not 300 crore. It is just that the tax evasion call means that corporate governance issues are being compromised, which is negative. And I think that is why you saw this knee-jerk reaction coupled with market sentiment being slightly weak. All that added to it. The business underlying is extremely strong. The brand is doing extremely well. We'll wait for more clarity, but I would expect this to be a passing storm as earnings start to deliver. But like I said, corporate governance has to be at the helm of any such large corporate which wants to make it into the large cap place.
Z Entertainment as well, that stock exits the F&O ban, and as per reports we understand that from the company side they say that the merger is on track with Sony. I know it's day after day that we ask you this question, Sanjiv, but just purely for, say, those investors who are really banking or hinging on this as a major trigger, you're pretty confident and you continue to remain that this deal will actually culminate and it will be beneficial. Where do you see maybe the stock price headed from this 250 mark?
Well, Avan, yesterday also I told you there will be a 10% knee-jerk reaction, but smart money will buy. And smart money did buy at that 240, 245. We did add some of it for our clients. Even though the noise is raw, a noise is going to be loud, I think it is more of rumor mongering by channels and other, constituents. I am very sure that the merger goes through. And imagine, Avan, what a MNC stock will or a company you will see in the next few months and few years. There is no way that Sony is going to not go to the last mile. And I think it's just a matter of compromise. As soon as you see the back of the going cars, this stock will hit 20% circuits. I can, vouch for that. You can get me online that day. But I am very, very sure the ambiguity is a buying opportunity. The underlying business has a humongous potential, given that ad revenues, ARPUs, all are going to be on the upside. And you can imagine what capital infusion from this MNC. It will become an MNC media play, which in India will be a very, very big entity. So I am very, very confident of this merger going through, and use this volatility if you can to, add to your portfolio. As a disclosure, Z is one of our top picks in our portfolio from that 190 200. We added some yesterday in this uncertainty, and we will stay the course till we get more clarity.
Also focus in on other stocks that will be in the spotlight. JB Chemicals actually came out with their presentation saying that they have an aspiration to be a 5,000 crore revenue organization by FY27. There's a thrust on cost optimization and margins in the range of 25 to 27%. While you also have something like a KIOCL, they've said that the operation of their pellet plant unit in Mangalore has been temporarily suspended. Let's get in a chart check, Nuresh, from you on these two stocks, KIOCL, JB Chemicals.
So KIOCL is a pretty low float stock, so would not be looking at it closely as such. But JB Chemicals is interesting. This has been a stock which has been slowly and steadily trending up. Overall, the fresh breakout around 1550 gives an upside of 1800, 1900 in the short term. So positive at current levels, a revised stop loss would now be placed at 1600.
I'm just going to scan through the list of stocks where we've seen big activity. And not large actually. AU Bank yesterday collapsed. HDFC Bank, AU Bank. Banks are just not chipping in. Bhasin Saab, everybody is waiting, and the wait continues. But banks are not going up, especially HDFC Bank.
Well, Nikunj, give HDFC and Reliance some space. The market caps are way beyond any of the others. They do have a bearing on the index as such, and the smart money which plays the ETF does use the index as a bearing. But I think there will be deliverance of results in the next maybe fortnight, which will again set the cat amongst the pigeons that you must have this in your portfolio. I would expect State Bank and Kotak to lead the earnings front from the front. And I think that this is a time, if you want to be in the market, that this is the time you should be adding these banks, particularly the large cap and the heavyweight SBI, because you cannot but make money over a period of time. In the short duration, yes, there can be another week of consolidation, but I am very, very positive. I think the Bank Nifty itself now will be the one which will lead the charge to 50,000 before the budget.
Well, you may call it exciting, you may call this as an opportunity, you may call it logic. Well, Ram Mandir opening later this month, and what are the kind of exciting news which we are getting? Indian Hotels has decided a pact to build 2 luxury hotels. That's in Ayodhya. Delhi, Mumbai, Ayodhya flight have started by Interglobe Aviation from 15th of Jan, so it'll start like next week. To connect 7 other cities, special 1,000 trains for Ram Temple or Ram Mandir inauguration. That's some bit more in terms of what kind of business is just going to generate. And if I just look at the multiplier on the economy per se, pure economic multiplier of Ayodhya, for 1 minute I'm just going to keep everything else and only talk about the real impact of the business per se. We are looking at complete transformation in Uttar Pradesh, and the word religious tourism, which up until now was something which nobody thought of, is now a reality. So which are some of the stocks which have rallied? And that's how markets move. They always move in and around large themes. So when Chandrayaan 2 happened, all the space related stocks, they went out of the park. Nobody's talking about it today because that was like a one-time effect. But when it comes to religious tourism and what essentially is going to happen post Ayodhya, I guess is a real deal, which means that now for multiple years, you actually will see tourism surviving, thriving and growing in a multiform manner, at least in and around Ayodhya and also Varanasi, new centers which are getting developed. Now this is one company which is up 68%, Privek. They essentially are in the business of religious tourism. Let's look at Indian Hotels. Let's look at IRCTC. So Bhasin Saab, which is the favorite stock, or which is your favorite stock when it comes to religious tourism?
Well, first, Jai Shri Ram. I mean, we are all looking forward to that biggest unfolding of the temple, and I mean, a lot of Astha is involved in that. And like you rightly said, the biggest business, at least in India, is religion. And religious tourism has got so much of credence. And I do a lot of tourism whenever I go, wherever I can. I do a lot of my visits to most of the temples and so on. And I observe over there how religion over there in each smaller tier 2, tier 3 city is worshipped and so on. So I have a clear mandate. IRCTC is headed to 1200 rupees over this year. And Indian Hotel is again shining like a jewel. Nikunj, yesterday we had some bookings to be done for people. I'm heading to Indore before, just around the budget. And you won't believe there is no room available below 10,000 rupees. I mean, even average three star, 4 star, for some. So you can imagine room rates are going through the roof, and the demand is unsatiable. So I think clearly the winners are going to be Indian Hotel and IRCTC. Also, if I can say, Indus Tower is the largest player in setting up telecom towers. And I think that once you have more visibility there, that would be another place where 5G connectivity and the whole host will be on a very, very large scale. So as a disclosure, we've had coverage on Indus Tower. We think the biggest beneficiary of Vodafone survival and now a capital infusion will see return of capital to IndusInd, which will see a very big dividend. And 5G connectivity and more towers is seeing the roost. So Indus Tower is a stock which I think can be re-rated all the way to 300.
Okay, fair enough. That's the view coming in across the board. Meantime, the general consensus, Sanjiv, is that pharma is likely to make a comeback this year. What's your outlook in terms of allocation to large and mid-cap stocks within the pharma space?
Yes, Avan, and pharma stocks have actually been the outliers, if I can say, particularly Oro Pharma, Lupin, which have been two of my favorites and in my portfolio. I continue to think the pharma ETF, particularly the SBI and the and the other Reliance one is extremely positive. So if you want, do that ETF flow over there, because the news flows regarding generic and other is getting only more positive. Plus you have the diagnostic space, which is again doing well. But for that, like I said, an ETF will be a better play, or a mutual fund in pharma will be a better play, because you will have a basket of that. As a disclosure, both Lupin and Oro are in our portfolios and have been relatively big outperformers.
Okay, thanks for that, Sanjiv. Let's get a move on then. And it's interesting insights actually into some of those shrimp stocks, because Ecuador, which is the top shrimp exporter, continues to reel under political instability. Let's understand what the implication is of this on some of these shrimp stocks. We've got Sharad here to walk us through the details. Sharad.
Well, the shrimp stocks will be in focus in the day's trade at important development coming in Ecuador. Now the reports are suggesting that a state of emergency has been declared. Now, of course, political instability is there, and the opposition parties, or the cartels you could say, are opposing the increase in the shrimp industry. Now, do remember, Ecuador is the largest exporter of shrimps, and this is followed by India. Overall, of course, the size of exports from Ecuador market, that's on the higher side, but do remember that there's a gain coming in for the Indian shrimp exporters, as well as the channel checks suggest that the inquiries might increase when it comes to the shrimp exporters from the Indian counterpart. Apart from this, there is a variant of El Nino which is expected to impact those areas as well, and that becomes a cause of concern. So it becomes Ecuador's pain, but it actually becomes India's gain as well. Now, if you look at the Indian shrimp exporters, third quarter and fourth quarter is generally a very strong quarter when it comes to the exports. And do remember, there has been a lukewarm returns coming in the stocks in the year 2023 itself. If you look at Avanti Feeds or even Apex Froze, there has been, you could say, a range-bound returns somewhere in the negative -6% to +13%. So you can imagine that the lukewarm returns and a strong geopolitical play might augur well for the Indian shrimp exporters.
Dipan Mehta joins us now. And Dipan Mehta, we are talking about how UP has now become really the go-to place when it comes to religious tourism. No one would have thought that this kind of a number would actually be there in terms of footfall for Banaras and now for Ayodhya. Is that the theme which you are betting on?
Yeah, good morning, Nikunj, and thank you for having me on your show. Yeah, I mean, we're very positive on travel and tourism, and I've spoken about Indian hotels and Interglobe Aviation also. And then there's, of course, our favorite with disclosures, Mahindra Holiday, which I think is, below its perform below its potential. So, first of all, there are very few plays in this particular investment theme, but whatever is there is, I think, has got great long-term prospects but is kind of fairly valued at this point of time. And these are great secular trends, Nikunj. You can see them compounding at 15% or thereabout for next 5, 10 years or so. And in India, always we have to be very positive on the consumption trend. And this is one segment of the consumption strength which can only go from strength to strength over the next few years or so. So positive on the investment theme. But as I said, there are very few ideas that one can actually invest in. At the same time, these are kind of fairly valued at this point of time, so better to buy them at a correction.
Is your approach this year in terms of the market? Would you be holding on to your stocks? Would you be looking at taking some chips off the table ahead of elections, maybe raise some cash, or you would just maintain status quo?
No, Nikunj, raise cash. At every given opportunity, at every rise, we want to raise more and more cash as we go along. It's not that we're going to be 100% in cash, but I think investors should be at least gradually reaching that 15, 10, 15, 20% levels in cash with every rise in the stock market. Because I think in terms of valuations, it's pretty much fair. And I'm not completely happy with the momentum indicators which have come so far, be it GST collections, automobile sales, cement sales, even what the banks have disclosed in terms of advance growth. And it's not that they're doing badly, it's just that the base effect is catching up very fast for Indian companies. And to that extent, I think we should expect at least year-on-year numbers for December, maybe March quarter, to be slightly tepid. At the same time, you could always have a minor, I would say, demand slowdown even in a very positive economic environment. From that point of view, I want to be a bit cautious. I don't think any geopolitical factor or liquidity issue will cause a correction. It'll be caused more by, I would say, disappointment in earnings which may come through in December or March quarter.
Uh, so, Dipan, what are your top mid-cap holdings? Just to understand that, how are you positioned and why would you be, how are you approaching them? I'm just trying to understand the thought process here. And we are not discussing a stock idea here. I'm trying to understand the thought. You'll appreciate where this one is coming from. Pure curiosity and academics.
See, I think, we remain invested in the top holdings with disclosure are companies like Tata Elxsi, Varun Beverages comes to mind, ITD Cementation, APL Apollo, then there is Polymed. We have a nice bunch of excellent blue chip companies, but I'm uncomfortable with their holdings. And because they are multi-bagger gains, you're uncomfortable selling them as well. So all I'm doing just now is whatever cash flows are coming through, I'm just sitting on it. I'm not investing afresh. And whenever a company I feel is not living up to its potential, like say something in specialty chemicals is, I think, largely underperformed. Large cap tech underperformed, but I still am positive on that sector. So wherever we find that, the performance is not up to our expectation, then we are trimming or exiting those positions and remaining in cash. And that really has been my advice. I think I'm amongst the minority who feel that there should be a correction in 2024. All the kind of blue sky scenarios notwithstanding, these markets just cannot keep on going up like this. Sometimes the law of averages does catch up. And I have this theory about leap years, where a lot of problems do happen during leap years, as we have seen in 92, in 2000, 2008, 2012, 2020, and now we are in 2024.
Expectation when it comes to earnings within the IT space come tomorrow, it all begins with the heavyweights. Recent reports are talking about strong growth rate, strong order book, segmental revival, and that the downgrade cycle may end in Q3. Do you concur? Where do you stand?
See, I'm looking at not looking at the actual performance of the IT companies, and I'm more going to be more focused on management commentary. Because this will be the first IT season, IT earnings season after the Fed has clearly stated that the interest rate cycle is turning over there, and a lot of the uncertainty in the U.S. economy, led by high inflation and high interest rate, had put a restraint on IT spends, although these companies are sitting on very large multi-year, multi-million dollar order book position. So it's just that execution was slow, discretionary products was slow. I want to see how that has changed in this particular earnings season. Are they seeing positive commentary from their customers? See, because IT spends are secular. I mean, every 2 3 years there is some new wave. Today it's generative AI, and some of the other related technologies. Tomorrow it could be something else. So as a business owner, you are constantly investing in software, and I've seen that in our own business, and you may also have noticed in ET now also that you're constantly investing in hardware and software just to keep the systems going and improve efficiency and productivity. So if you have the confidence that the business will do well, then you will undertake those expenses. And that is the key question to ask the IT managers this time, that are they seeing revival of confidence in spending for the future? The numbers, I think, are largely discounted. There will be a disappointment as we have seen in the September quarter. So don't read too much into that. Stocks will somehow discount the future, and not we have seen for the December quarter.
The leap year theory is very interesting, right? Every 4 years something happens and you actually write about it. I just thought through it what you just mentioned. So if that is the logic, then we are in for what? A straight line decline.
Yeah, Kunal also was anticipating that, right? Kunal, you also dug out the patterns, right, for leap years or every 4 years?
Yeah, every 4 years.
Yeah.
That's a thing. Then January was the other effect which is playing out for the indices, and then the near-term weakness, of course. So I think on the base of all of this, we would probably expect the volatility and the trend to be a bit more swifter on the downside.
Okay, just looking into that right now and bracing ourselves. But you think, Dipan, that I mean, typically when markets do fall or correct, even in intact bull markets, it's a sharper decline for the mid and the small caps. You think this time around it could be different because there are many large caps out there which are underperforming. Large cap outperformance as well is in very specific pockets. It's the mid caps and the small caps which everyone's been chasing, and that's the one that's the pocket where you are seeing companies deliver those kind of growth.
You're right, I think. And another theory I have, again, I'm sharing with you, and I reserve the right to be wrong, is that even if we don't have a steep correction in the Sensex and Nifty, we will see the markets narrowing. I mean, you will just see 10, 15 Sensex Nifty stocks maintaining or delivering returns, and you may see a correction in large swaths of small mid-cap companies. And actually, investors' portfolios may underperform. See, last 2 years, investors' portfolios have done really well. If you benchmark it versus the Sensex and Nifty, I think that trend is most likely to change as well, because mid-caps are priced to perfection. I mean, even a slight miss in their earnings and investors could get disillusioned, because end of the day, there's a lot of trading positions also over there, and there's not that much liquidity. Or once the result comes bad or something goes negative, for a stock to decline by 15, 20, 30% is nothing. It takes maybe a few trading sessions or so. So from that point of view, also I'm a bit cautious on small mid-cap companies. I mean, great quality businesses can trade at high P multiples, but they could have a quarter or two where the earnings are soft, and that certainly can cause a correction. Whereas the likes of Reliance, HDFC Bank, ICICI Bank, the large ones, Larsen & Toubro, they continue to deliver, and then you have these FI flows also coming in, which is holding those stocks up. So it's easily possible that you may have a phenomena where you don't see really a correction in small mid-cap stock if you look at the headline indices.
Dipan, from the start of the year till now, have you eased off positions from anywhere, trimmed anything?
Yeah, absolutely. I think, I mean, I'm being candid enough to say that, we are sitting on some amount of cash, and with every rise, we are looking at adding more to our cash positions. Thankfully, we are in the broking business, and Nikunj, broking capital market activities are doing exceedingly well. You see the numbers from Angel Broking or Motilal Oswal, some of the listed stock broking companies. So these are great times from a stockbroker perspective. So we are having strong cash flows with the grace of God. So we're just not investing those cash flows into fresh equity, as was the strategy which we always followed. It's just that we're just staying back for some time And as I said, wherever the results are not looking that great, we are looking at exiting those positions. Like Quest Corp is something which I sold after holding for many years because it just didn't live up to our expectations. And you won't believe, even a travel company like Thomas Cook, we sold because again, the numbers never came through despite so much of potential. So we are looking at exiting positions where companies which we thought were great buys 2, 3 years ago, we invested in them, patiently waited, but the numbers just did not come through.
Okay, Dipan, great chatting with you. And by the way, it rained today in Mumbai, so hoping there could be some green. Dipan has this theory that each time it rains, the markets will do well.
That's what the
It's been 4 months in Bombay a year.
Yeah.
Dipan, हर बार थोड़ी green होता है.
Not har bar, pehli bar.
Okay, first time it rains.
Yeah.
So Dipan Mehta, next time we should be using that as a theory, right? Get the weather right for the first.
That theory is applicable only to the monsoons, please.
Okay. January rain not allowed. This new theory I did. I like the leap year theory. This is a rain theory, man. This is a new one, Dipan.
Okay.
Thank you.
Anyway, we will predict the rain gods a little later. But Dipan, good chatting with you as always. Let's move on to all the action in Gujarat. And we're going to be kickstarting the vibrant Gujarat Global Summit today, where the Prime Minister is going to be meeting with a whole host of global CEOs, other global dignitaries as well in Gandhinagar in the state of Gujarat. In fact, we have our colleagues Anurag Joshi and Sumit Chaturvedi currently on ground there. And they bring us all the action and, of course, all the prep ahead of the summit.
The Vibrant Gujarat Summit kicks off in a short while, and it will be inaugurated by Prime Minister Narendra Modi. And as you can see behind me, there's a lot of security everywhere in Gandhinagar today. And Vibrant Gujarat has completed 10 years. So this year's Vibrant Gujarat is kind of like a special edition. And so we are expecting a lot more heads of states, and many global CEOs and policymakers are there for this year's Vibrant Gujarat. In fact, Prime Minister Modi landed yesterday, and so did the chief guest, the President of UAE, Mohammed bin Zayed Al Nahyan. And the Prime Minister held meetings with the CEOs of Micron and Suzuki, and he is expected to meet several CEOs today also. Sumit, can you give it a peek into what lies ahead with the summit?
Well, today, the big day, the first day of the summit, and right from Mukesh Ambani, Gautam Adani to Kumar Mangalam Birla, all global CEOs are present here, and PM Modi will officially start the whole today, the Vibrant Gujarat 2024 Summit. A big, we can see that the economy of India, the potential is there. Definitely, we are now moving towards becoming a $4 trillion economy, $5 trillion economy. This all is needed. The partnerships we can see here between Indian companies and global companies and Indian government, which is here to attract all those potential investors, is clearly visible here. The vibe is quite positive when it comes to attracting investments. A number of CEOs are present. 10,000 exhibitors from around 30 countries are present here. So it's 20th year of Vibrant Gujarat, and this time in Gandhinagar, clearly a lot of positive vibe coming when it comes to attracting investment, India being an emerging economy and on the way to becoming $4 trillion and $5 trillion economy.
Yeah, so we're just waiting for the summit to start, and as you can see, there are many heads of states, policymakers, CEOs that are entering Mahatma Mandir, where Vibrant Gujarat is happening. And this is going to be a very special kind of summit because this year, this is just ahead of the year, this is on the year when the general elections are also taking place, and it is also a test of strength of the Indian economy, like how Sumit said.
Right. Sumit Chaturvedi, it's your birthday today, I've been told.
Yeah, it's my birthday today. Happens to be here. It's a working day, though I'm happy to work in this kind of atmosphere.
No, my question is that take it easy.
That's what we want on a special day. Yeah.
My question is take it easy.
Okay.
Enjoy the dhokla, enjoy the fafda. Enjoy the jalebis. Take it easy, my friend. It's your
And
birthday today.
hopefully a glimpse of Elon Musk as well. I think Sumit would be more excited about that, right? And I think that's that one meeting or one, you know...
Is there a press conference there? I mean, will he be speaking to Indian press and global press, Elon?
It's right now the overall possibility of him coming here actually has lessened, as we can see and as we can feel, and we spoke to some sources. The possibility is less now, but whatever happens, it's going to be a big bang. Overall announcements coming from many other corporate leaders. Elon Musk may miss this time. That's what the vibe we are, or the information we are getting. Last moment changes could be there, and he may change. He may not come at all. That's another possible information we're getting from here.
Alright, Sumit, enjoy your stay, and Sumit, once again, happy birthday. 137 points up for the Sensex. Nifty is not going anywhere. We could be in for a very flat start. So, Naresh, rather than preempting the market direction, do you think we should wait for the market to prompt the market direction? I mean, it could be today, tomorrow, but Nifty decisively will give you a sense whether it is finding support at the support level or it is likely to go below the support level. Do you think by the end of the day we'll get clarity on that, Naresh?
Looks like so. If we break below 21,480, 500 and sustain below that, then that opens up a move towards 21,300 to 21,200. That's the next support band. But overall, the momentum is not great. So these are times when you don't want to trade the index and focus more on the mid cap and small cap side if we see any leadership, and trade on a lower size because the momentum is gone on both the sides.
Okay. Kunal, what about your mid cap strategies?
So, Borosil Renewables is one of the stocks which yesterday managed to give a breakout. It's a stock which has gone through a very sharp correction over the last 1.5 to 2 years. So, I think yesterday it managed to break past about the 500 level. So, would suggest a buy with 540 as a target, and stop loss could be kept at 490.
Okay, those are some stock specific ideas coming in from both of our experts. I just want to, revisit a couple of other stocks as well, which are going to be in focus. And let's see whether there's any relief coming in on Polycab or not. Because they said in a statement last evening that there's been no communication from the tax department. They deny any tax evasion reports. While, of course, in the last 2 trading sessions itself, the stock has lost about 9%. Now holding higher by about 3.6% as we speak on Polycab, but lots of other stocks. Before that, let me take it across to Sharad and figure out what's the stock on his radar and what's the cover he's picking up. Sharad?
In focus is Orchid Pharma, and the buzz in the street is that the company will be getting a potential royalty expected coming in for a novel antibiotic product. Now, of course, this royalty is expected to kick in by FY25 after the approvals come in from US FDA and EMA as well. And importantly, the street is estimating that this would be margin accretive when it comes to the company. Also, importantly, the royalty income is expected to come roughly 6 to 8% of the sales contributed by this drug. Now, the channel checks also suggest that important triggers include a beneficiary coming in for FY26 for the scaled utilization of the newly implemented 7-ACA facility, and in the ramp up of the products such as cefiderocol and the ramp up in the NCE segment as well. So, institutional interest has also actually picked up over the coming weeks in the stock as well.
All right, thanks for that, Sharad. Time to shift gears. Here are some of the other top stories that we're tracking. And masked men broke onto the set of a public television channel in Ecuador, and they waved guns and explosives during a live broadcast. A 60-day state of emergency began in Ecuador on Monday after a notorious gangster vanished from his prison cell. It's unclear whether the incident at the TV studio was related to the disappearance from a prison in the same city or not. Meantime, the French President Emmanuel Macron has named Gabriel Attal as the country's new Prime Minister. Attal, who is the current Education Minister, is the youngest person to occupy France's second highest office at the age of 34. Interestingly, it's also him being the first openly gay head of government in the country. Meantime, the Boeing chief, David Calhoun, has made the first public remarks since the mid-air incident, an accident, acknowledging the errors by the US plane maker. As remember, more than 170 jets have remained grounded for the 4th straight day. He said the company would ensure that accidents like this never happen again.
And the World Bank has released its GDP growth estimates. It has retained India's FY24 GDP growth view at 6.3% and estimated 6.4% growth for FY25 and 2024 global GDP growth is pegged at 2.4%, the same as June last year. Meanwhile, the institution lowers 2025 global GDP growth estimates to 2.7% from the previous year. Also, there seems to be no relief from the bone-chilling cold in northern India as mercury has now dipped further in Punjab, Delhi, Haryana, Uttar Pradesh as well as Rajasthan. In fact, rains in Lucknow have resulted in a drop in temperatures as well. The Met Department has warned dense to very dense fog and severe cold day conditions throughout the next 24 hours in especially Punjab and Uttar Pradesh. But the year 2023 has been confirmed as the warmest on record. Now, according to the EU Climate Service last year, that was about 1.48 degrees Celsius warmer than long-term average. These global records are bringing the world closer to breaching a new international benchmark.
All right, let's move right on then to the editor's take. Polycab in the spotlight on the backdrop of the tax evasion reports. What does it mean? Let's hear out Nikunj's take.
See, that buy is a function of also what's happened in terms of last 2-3 years and how they've just really managed to occupy the center stage, and they've been a pedestal strong in terms of the P multiple they're commanding. So one is the impact and second, one is the assessment of the news and second is the impact. Now, since a stock is priced to perfection, it really had become darling of the market. There were a lot of margin trades which were there. It is an FNO. So what happens is typically when a stock which is priced to perfection and after a great return, when a news like this comes up, the first reaction is that you sell and then you react. And I think you sell and then you react kind of a factor really was at play. After a great run up of about 100% in last 1 year, you got to really ask yourself is that what is the fair P multiple for this entire industry and per sector per se. I mean, these stocks cannot be commanding P multiples which are 50 times, 50 to 60 times plus, because they are not like fat margin business and the growth rate is not going to be like, like fintech and consumer tech that you can give this kind of an P multiple. So I think for the sector per se, P multiples are likely to contract because the growth base effect would kick in. In that, Polycab really occupied the center positioning. A lot of folks bought into Polycab because of price, not because of business. And when a news like this comes out, market will always see, panic. I don't know comment on the income tax, query and what it will actually eventually mean for Polycab. We'll have to wait for the department to conduct their research and for Polycab to come up with a firm statement. But for me, I think this was an overowned stock, expensive, and typically when a news like this comes out, you actually will see a panic reaction like this, which I think is not surprising, at least in my book.
Right, okay, let's understand the index strategies as well and tell you where the consensus is headed. While we have seen a bit of a decline come in the markets of late, and more importantly, volatility yesterday as well. So it's a consensus no trade from both Kunal as well as Naresh on the Nifty. A similar view then on the Nifty Bank as well, no trade from both Kunal Bothra as well as Naresh Mirani.
Okay, let's understand a very basic strategy for Bank Nifty and the Nifty. Naresh, the Bank Nifty, like you said, that it's gone below its key support levels. Is today the good time to initiate a short or maybe buy some puts?
So this is a tough trade because you've not the overall longer term trend is still positive, and this is a correction wherein it could be a slow drift. So it makes it difficult to take a trade on the short side. You want to be buying on dips on a major support level. we've just gone back and retested the recent swing low. So I would be not looking at a trade itself. But if somebody wants to trade, say, it would be a sell on the rise rather than at current levels.
Kunal, the same question. Bank Nifty, I mean, if you think that 5-7% decline is coming on the index, then the Bank Nifty could really lead the decline.
Yeah, but Nikunj, I think I would probably want to trade the stock-specific, shorts over here. So over the last many days, HDFC Bank, ICICI Bank are the ones which are showing signs of credible weakness, and I think making trades on the fresh short side into the stock-specific aspect could be a better strategy for an index trader. The only concern is the sudden bout of volatility as well as a lack of volatility. So the India VIX is at 12.5 to 13 odd levels. So there are periods where you keep a stop loss of 0.5% to 1%, and those get triggered on the index specific because of the lack of index vols. And I think the pattern is much more clearer for the stock specific vols. So I think I would probably want to initiate more shorts on the stocks rather than on the index front.
Okay, bunch of stocks which are going to be in focus. PFC, they've got the RBI nod to set up a finance company in Gift City in Gujarat as well. There's also ONGC, which is in news. They've incorporated a wholly owned subsidiary, that's OVL Overseas, at Gift City as well. So a lot of news flow coming in from Gujarat now. Polycab, of course, is one stock which is going to be in focus. And actually, it's seen a bit of a respite this morning, much unlike that 9% fall that the stock has already had in the last 2 days. There's Lupin as well, which has launched, one ophthalmic solution as well, which is which is an exclusive first to file. So that's another stock which is in focus. There's JB Chemical as well. They're targeting to improve their productivity as well as CDMO business revenue of about $100 million, I stand corrected, by FY27. So those stocks as well are in focus. Look out for what Z does today, because I think Z is going to be exiting from the F&O ban list. So today is when you're going to see very, very sharp reactions coming in. Remember yesterday as well, the stock gap down, was down 10%, saw a mild bit of recovery by about almost 3% from the lows of the day. But I think today would be the litmus test here.
Let's see. I mean, you are in just for a nothing sort of a start, just not here, not there. There is so much of liquidity on the sideline that the fall is not going to be very large if it also happens. Straight line falls are not going to happen, that's my view. First rates, the breadth is looking good and promising. Nifty is not doing anything at all. Sensex just like a flat start, a 72,000 index, 59 points here or there. Markets are clearly running out of what would be called as the December end phenomenon. The breadth is looking promising, but it is not looking very charged up. The advanced decline ratio at the start, if you're in a vibrant momentum driven market, it normally is 1:8 or 1:10. The small cap index is just a shade of green, so to speak. So no large gainers there. I just want to address some of the newsmakers now, some of the big newsmakers. Not too many newsmakers. You want to start with Polycab, you want to look at Bandhan. Those are two newsmakers. Then you've got TCS side of numbers, and then next week it will be all about more IT companies. It will be all about private banks. So TCS side of numbers due tomorrow. Infosys side of numbers not going anywhere. Metal stocks across the board are looking strong. And then I want to look at what could be called as the theme-based, mood-based stocks, the UP tourism or the Ayodhya-based stocks, IRCTC, hotel stocks, just about anything and anything which has got to do with more footfalls because of Ram Mandir inauguration. I think that theme, will continue to stay charged up for next couple of days. And that's the way it is. It's a flat start with no particular bias, nothing large in terms of a mover or shaker also.
Let's see what a Polycab is up to. They've denied any rumor of a tax evasion, whether that is seeing any, recovery. 2.5% higher for this one. JB Chemicals as well. They're aspiring to be a 50 billion rupees revenue organization by FY27. So look out for that stock. There's of course ONGC, BPCL, IOC. Goldman Sachs has downgraded all three counters to a sell. By the way, Delta Corp also came out with its numbers yesterday. And not surprising that the PAT has fallen 60%. Delta Corp slides further, 5% lower at 144 levels now. There's a Moody's downgrade on Vedanta's ratings as well now. So look out for that stock too. SEBI has kept Ashirwad Microfinance in abeyance. So that's going to impact Manappuram too. So that's another stock that you may want to look out for. And then of course Z, given its exit from the F&O ban list today, Z is actually holding up in the green, 1.5% higher for Z as we speak right now. Kunal, what's looking good to trade considering it's a flat start for the Nifty?